Hi, this is Randy Finney with Right Side of the Chart. This is an early session update for Wednesday, June 29th, 2022. It's 10:05 Eastern Time. Just fired off a post here with a chart and my thoughts, and I'm just going to build on those or expand on those thoughts here. And I think it's a perfect time to do the video. We're back testing. We're at key level right now, very key level to me. I'm going to zoom in a little tighter. We're on the NQ 60-minute chart, same one I've been showing lately. Remember that pullback target zone was banned. I have to add it in the video here. It's down to that 11,700-ish level right there. That's big support. Actually resistance now. Remember, support once broken becomes resistance, and also comes in with the primary uptrend line. So I gave you my thoughts this morning. I put favorable odds, favorable meaning better than 50%. I actually said about 60%. Plus that we might get the bear trap scenario I laid out. So let's talk about that real quick, and let's talk about what happens if we don't, because that's the key. We have potential divergence here. I'm not crazy about it. I like to see you come up and make a higher peak in the MACD, clean, two clean troughs with obviously the second one being higher. But with that being said, divergence is anytime the indicators are making higher lows, which they did at this point. Compared to prices making lower lows. So that's where we're at right now. That's where we were when I screenshotted the chart, got it out to you. And so we're looking at here is, remember, today was GDP day, and just like it's one of the bigger reports, and it's a market mover, and you tend to get, just like the FOMC meeting, you tend to get initial knee-jerk reactions, which aren't always the lasting reactions. So for today, that knee-jerk reaction was to the downside. It was a big miss. I mean, the GDP came in below expectations. It was already in print. Expectations were for a negative print. We got that. Consumer expenditures were even worse. Here it is. Here's the numbers. You can see. I'll zoom in. Consensus on GDP was a drop of negative 1.4%. Came in at negative 1.6. And then personal consumption expenditures consensus was increased, plus a positive 3.1, came in at half of that, almost at 1.8. And so that's outright bearish. Absolutely no other way to spin it. But I always say this, the important thing is, how is the market going to close today? How much of this was priced in? They say the consensus, but the professionals, these are just economists, putting out their numbers. The big money's on Wall Street. What are the traders? What are the professional traders doing? Hedge fund, mutual fund, pension funds, what are they doing? Are they going to buy this or sell this? Do they think that this has already been priced into? Remember, we're down quite a bit. So again, I'll tell you where I think things are going and how to react, and give you my trading plan. But again, the important thing is, if they buy this up, that's bullish. When you start seeing bad news get bought up, if they can close this up today, and now we've turned green since I started the video, or since I got that post out to you this morning. So let's get back to the charts here and finish up. So that's it. Let's you got that post. If you're listening to this video, we would have seen the post today. So that's the big level there. There's our primary uptrend line right there. And then the big, to me, very big 11,700-ish level. Why is it big? Well, you have on this side a gap. You have a big reaction high there, and a powerful impulsive smackdown or rejection. Another test that level, followed by another very impulsive rejection. Another test level, followed by another rejection, and then finally a breakout. And now we came back down through it. So let me say this, let me be very clear, like I was this morning. A breakdown is, on face value, it's bearish until unless you get this bear trap scenario. It has not happened yet. Right now, we're just simply back testing. So to add on to the object, I gave you strategies for both those of you that think we're going to do this and those of you that think we're going to do this. I gave you how to trade it, suggestions, tips. That's all I can do is tell you how I would trade it, and whether I'm bullish or bearish, that shouldn't affect your positioning or bias. You should have your own, outlook for the markets and how you plan to trade. But it's simple. If you are as I said, if you're bullish and you think these the more significant positive divergences on the daily chart that I've highlighted, I'm going to get into some of those individual big market leading stocks too here in just a second. But if you think they're going to play out, then keep in mind we're still in an uptrend, a near-term uptrend. An uptrend simply defined as a security making a series of higher lows and higher highs, right? And just because today we're down here, we're still well above the previous major distinct reaction low. You know, you can look at each level there, and even then we're above these as well. So we're still very much in an uptrend. Now, do I like it that this trend line was taken out? Absolutely not. But if it gets recovered in 11,700 by, you know, a solid recovery. Right now it's just, again, a back test, and, you know, that doesn't mean you go to 11,712. You know, you want to see a clear move through here. You'll start to recognize it when it happens. And again, that has the potential for a bear trap, because I have to imagine a lot of shorts piled in, and weekended longs may have gotten shaken out on that move. I told you before I didn't want to see that broken, but I give you my scale out zone today. That's just my own personal trading plan. Here, you know, we have a pretty decent, not as good, but decent support there, about 11,534 ish. And you can see my support levels on the chart. So, and if we take that last one out, yeah, there's a potential for a lot of things here, and I may change my tune based on what I see here in price action, and what I see on the daily chart, and what I see on the market-leading FAANG stocks, and what I see on the 11 sectors of the S&P 500 and other key sectors. So there's so much that goes into, you know, my opinion. It's not just any one level. It's a combination of many things. But that's it. So let's watch this as I'm doing the video. Maybe we'll get some resolve, maybe not. But so far, you know, the onus was on the bears to take this breakdown and run. And look, they are still in control, but well, it's stalemate right now. Mexican standoff, if you will, between bulls and bears, because we're right on the right back on that level. So I don't know if we'll have resolve by the time I'm finished with this video. I'm going to get to some other charts here in a second, but that's it. This is just what to watch today. You got resistance right here, and support down below here. This is bulls need to just take it back here, and if they can do that, then again this whole thing becomes a false breakdown, aka bear trap, and it could be powerful stuff and still send us up to my longer term, even my intermediate and longer term targets. Let's talk about those. Let's go to the Qs. All right, so this is the biggest picture. Is we're in a bear market. I still think we're going lower this year. I still maintain these targets down here. It's just a matter of how do we get there, or when do we get there? Do we have a decent tradable bounce first? I mean, we've already had a tradable bounce, don't get me wrong. Since I pivoted the day of the lows, I believe it was, told you last couple weeks ago. And, you know, so far the rally has been, I have to turn well, I can do that for you and turn it off and show you. The rally has been 10%. That's obviously a very swing tradable rally. Most people would be very happy to get 10% in an entire year on their portfolio, and to get it in a week or so, that's what swing trading is all about. Get in and out, trade these little rips and dips, and magnify your gains if you're an active trader, swing trader. All right, so what do we have here? Well, you can play glass half empty, glass half full. This is one of my favorite trend indicators, one of many, but one of my favorites. PPO signal line, the white line. When it is above this line here, you can see a yellow and a red line right there at about the negative 0.6 level-ish. When it's below that, when QQQ is below the level, not QQQ, the signal line, the 9 EMA, you're in a bear trend. That's when COVID hit. And then all along it told you, hey, you're in a bull trend, bull market. And then here, boom, it crossed right there. We were already short, but that helped to confirm. We had a beautiful breakdown, and that trend indicator flipped bearish, said, hey, be short. And you know, as a swing / trend trader. But then right here we had a bullish falling wedge breakout highlighted there, divergent low, both on the daily chart here and the 60-minute chart, and that led to this 17% rally there. And it said, hey, we're in rally mode, you know, you may not want to be short. Again, that you know, we got in closer back here because you hit support and all that. These aren't exact timing indicators. It's a trend indicator to tell you the current trend. So let's just wrap it up here. We're still clearly bearish on that. So, you know, you got to take divergent lows with a little bit of grain of salt in a bear trend and in a bear market. But that is bearish. But on the flip side, you do have, as I said, positive, aka bullish divergence, just like you had here at that low, which gave us that roughly 17% rally. And so there's certainly the potential to have that again and hit my uppermost bounce target, which again, I think I said I already covered many times. I think it would be about 20-ish percent, 20 something percent if hit. And that'd be this primary downtrend line right here. That trend line and or the either one of these 200-day moving averages, the exponential or simple. And then I had some more near-term swing targets that I gave you as well here on the 60-minute chart. Swing targets up there, T4 at about 318, T5 potentially up about 330 or so. All right, so while we're on this 60-minute chart of QQQ, I do have a few different boards. This one's probably the most clean right here, and it shows the what I think are the most salient levels to watch right now as a swing or trend trader or even an investor. You have the primary downtrend line right here off the April high, near-term down, not the primary, but the near-term downtrend line off the early April highs. One, two, well, several reactions there, three, and then a distinct reaction here and a pretty impulsive rejection so far. You're coming off just like on the daily chart. Oops, that's not what I meant to do. That's the bigger daily divergence there, but here's the 60-minute positive or aka bullish divergence. And then you had this downtrend line with the breakout. You've got a ton of gaps in here. I've covered all the gaps recently. And then zooming in nice and tight. This is kind of today's levels to watch. 208.50-ish, which is pretty much the bottom of that recent trading range right there. We tapped it today or close enough to it. And then former support, well, first it was resistance, the top of the trading range. We gapped above it. We came back. That was the top of my, was it the top of my pullback target zone? Where were we? No, that was the top of the pullback target zone off there. That was the bottom of the pullback target zone. So we violated that. And again, that puts us in near-term precarious or bearish technical posture. We went below it. We back tested today, and this is the same level right here. We're just talking about on QQQ or NQ. So this is the level, and again, you call it round off to 285 right there. Bulls need to take that back. If the bulls take it back, you're most likely going to see a short covering rally, bear trap. Will send us up for another run at the trend line. And then, of course, if we can break out above the trend line, that's going to be even an additional buy signal, even more bullish. Until and unless that happens, as I like to say, resistance is resistance. Remember, this was support on the way down. We had a little bit, few candles there, and then we broke it. And we back tested it, and so far a rejection. This candle's live, you know, of course, as I'm doing the video. So this morning we went GDP, we went back. Now onus was on the bulls here to take it and run, but they failed so far with the rejection there. But it ain't over till the fat lady sings at 4 p.m. today. So let's see what happens. This bears win, this bulls win, at least near term. That's the way I look at it. Okay, so we know this is what the daily chart looks like. The divergent low, the downtrend line to watch on QQQ. Gaps above, big level here. Those recent highs would be, you know, big level as well. It's just above the trend line. And then you look at other stocks like Apple. Let's just go through some of the market leaders, and then I'll wrap this up. So Apple. All my long-term charts on all the big FAANGs, including Apple, are bearish. They've already triggered some of my most reliable long-term trend indicators and levels I watch. But you know, again, so where do I think Apple's going before all said and done? Ultimately down here, at least 106.50. But it's a matter of how we get there. So I think I'm still leaning towards a rally before then. Nice positive divergence. Yeah, the trend indicator, look at Apple. I have this trend indicator there at a negative 1.18. And again, it does a good job. Yeah, there's only a few instances right here, here, and that was about, and a little bit of a there, and that you can see those are some of the weakest periods that Apple's had. And it's clearly below there, so you know, we're in a bear market. This could stay there for a while, or it could go back up, just like these. These were brief periods. They were correction. It was in correction mode during those periods, and that's still there. However, on the flip side, so that's the bearish part. But on the flip side, we have positive divergence right now on the king, Apple, biggest component of the S&P 500 and the Nasdaq 100, and a nice clean downtrend line, just like QQQ. Now that's not mere coincidence. These top fangs are pretty much QQQ. They have the highest weighting, and so the charts are usually going to be very similar to most of the big fang components, and that's it. So, and then what's Apple doing now? Well, it's in a near-term uptrend. You can't argue that. It's in a intermediate to the longest term trend is bullish. You can go out long as you want, and it doesn't take a rocket scientist or a skilled technical analyst to tell you this is a long-term bullish trend. But intermediate, if you come back here from just like the market, Nasdaq peaked around the end of the year. Nasdaq in November, S&P, everything else, including Apple, right around the beginning of the year, and it's in a downtrend since then, right? So that's an intermediate term downtrend. Right? Call it a bear market, call it a bull market. I don't care. Those are just semantics. It doesn't matter. I care about more about the trends, the tradable trends within the bigger trends. All right, so that's it. So if it can break out, and right now it's also holding support. You had pretty decent support here. You can see right there. That was about over a week of candlesticks that held there. You got a lot of bodies. One little intraday pierce and it snapped back above. You got a gap right there in the bottom of that candle, and that's it. That level's about, it's not a hard level, but it's about 137, and so Apple's holding above that support for now. These are things that will give the bearish case, in my opinion, check marks. If Apple clearly takes that level out, then that's bearish. Obviously, a break of the lows, I don't need to tell you that's bearish, but even near term, what's going to get to there would be that. As of now, it still has the potential to hold this support and then go on and break above the trend line and then run all the way up here. There's previous highs, and then that would be a potential bounce target there, 150. I think that'd probably be a good place if Apple gets there to look to maybe take profits, tighten stops, or maybe even get into some shorts at that point. Microsoft had a comparable trend line, but it had a failed breakout. See, this is a bull trap. I'm sorry. You had a breakout, but this is why that one didn't stick. Why? Because at the same very time, Apple, the world's largest company, was hitting resistance, its comparable trend line, and it got rejected. So that's why you don't, if you're trading Microsoft and you don't trade Apple, don't trade Microsoft in a vacuum. Watch the other fangs, watch QQQ, because QQQ at that very same moment that Microsoft had the breakout, QQQ ran into and was rejected at its comparable downtrend line. That's the whole index. That's much more important. So just a little lesson in why I sit here and talk for 30, 40 minutes and cover so many charts and sectors, because it's, again, you want to try to really do proper analysis. Don't just chart one index that you're trading or one stock that you're trading. Chart as many as you can, at least the important ones. You don't have to cover all the 500 stocks in the S&P 500, but you should look at the top 5 or 10, as well as the sectors that make up that index. All right, so that's it. Oh, okay. Levels to watch. Check mark for bears. 250. What is that? 252ish right there. So far, we're above it. So again, we're near term, very near term. Microsoft is in an uptrend. All right. So don't like the action over the last couple days. I don't like the fact we came back, exceeded my max pullback target zone, but it wasn't by a whole lot. And again, the potential is there that may be a little shakeout move, and that's the way I'm leaning. So I'm still sitting tight on the longs for now. But by the end of the day, I give you my scale out zone. I may be partially or fully out of those longs if we take another leg down and take out those support levels. All right, I don't need to go over each and every one, but I mean, Amazon, I'm still, liking these charts. I know we're in a bear market, but look, you had divergent low. We caught that one, nailed that trade to the button right there. I highlighted Amazon as one of my top picks for along right here. The day at the bottom, because we hit my long-term support level. If you're new to the site, that was it right there. 103.30 right there. So we had multiple entries right there, and then a couple weeks later I highlighted it again right there at that low and said, look, this time it's even better because we had positive divergence. We didn't have it the first time around. aka bullish divergence, and then I highlighted again here. So now we have a pretty much a triple bottom right now in Amazon. Obviously quite bearish if we break it. Ultimately, I think it does get broken, but you know, again, there's so it was highlighted here, and it's already been a nice trade so far. And look, here's a common theme. Look at all these downtrend lines on these fangs. When you get these popped, when QQQ most importantly pops its trend line, you want to watch these, and the more of these fangs that I'm covering right now pop these uptrend lines, the more likely it is to stick, and we could have a potentially explosive or a very strong, nice rally that could last a couple weeks, maybe even a couple months there. So could go either way. You know, for me to tell you any otherwise, anybody that tells you the market must do this or must do that, and they tell you with absolute certainty, you know, run, don't walk away from that. Nobody knows for sure. All you can do is identify key levels and then react. If these bullish, like here's a breakout right here in Tesla, by the way. Look at that, nice, the same trend line, right? Breakout. Why didn't that breakout stick? Well, because what I just said, QQQ at the same time, Tesla broke out first, but right here, and when it failed, roughly is when QQQ, yeah, same day, got rejected. But now, look at this. Tesla's back testing. So, and there's a gap right there. So Tesla looks like an objective long here, but I wouldn't go long until and unless we get the recovery above those levels I started the video with, and on that chart I got you. Out of today, pretty much today's highs in both QQQ and NQ, because we've already back tested, as I started the video, we were back testing those levels in the trend line. So there it is. Tesla, you know, constructive chart, but this breakout could, like Microsoft, fail. And so I think we're at a very critical level today, and that's why I'm doing the video right now. You know, we can rally up and close the day green. A solid green close is going to be very bullish in my opinion. Solid red close today is going to be quite bearish in my opinion, especially with the levels I mentioned below are taken out. Alphabet, look at this, just beautiful chart here. Trend line, breakout, a near back test, move back up. It's been tapping on this level. That's 2384 right there, and this is also a pretty decent support level, 2252, and we're at it right now. So we've been, you know, moving up, series of higher lows so far, but we need to hold here and then go break this level, and then that's your next target, about 2492, or if we break support, there's your next and pretty much final support. I know the actual technical final support would be that reaction low, but I think it's lights out if, you know, we can't hold these levels, these near next support levels below. Alrighty, I could go on and on and on and on and on, but Meta, we'll finish there. You know, Meta's not the crowd favorite lately. A lot of motion in that company, but with that being said, I mean, this is a pretty powerful divergence that's been forming. You know, we had a divergent low right there, and it's not as if it didn't work. That was certainly a tradable rally off that divergent low, with the stock rallied about 33%. The only difference now is the divergence is bigger. It doesn't mean it has to play out in a bear market. Sometimes these divergences just fizzle out and they get burned through, meaning you go out and you take out the previous lows. But if they play out, that rally could be pretty darn powerful. We got some central bankers. Oh, well, I guess they've already spoke. They should have. I think they were supposed to start at 9 a.m. today. I'm not sure. Both the Fed and ECB. So we'll see what comes out of that. Maybe that's why the markets are kind of grinding around as I'm doing this video in a holding pattern. But there it is. So let me just summarize here. Today's action so far, up until, you know, right now as I'm talking, is bearish. The breakdown, and so far we're still back testing. We're right below that level, but it has the potential to be very bullish. I think if this is recovered, and I'm still leaning that way. I put the odds there, and my odds are not at 80 or 90 or 100%, but they're north of, you know, 60%, and so that's why I'm still holding on to those swing longs for the time being. And you guys already know where I'll change that tune, my scale out zone. And that's it. I'll cover do gold and palladium. Palladium's been running. It's hit the next target. I think it's been had a nice move today, pulling back now, but still well up. I'll cover everything else in a separate video. Let me get this one out to you, and this is where really my focus is right now, and on the equity markets. I think we're poised to again have if this could happen, a nice run here, and all the support levels on the way down, or your targets on the way up if you want to actively trade. But again, if we can recover this, it's going to be pretty darn powerful. If we get to move up there, then I would just turn my focus that's what I'm doing, swing trading, and then focus on that 60-minute daily charts, and look for the next upside targets. All right, let me wrap it up, get it out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.